Hello, dear traders. The US stock market closed its third eventful week. A deep decline was replaced by a full-scale upward movement, and the indexes are striving to reach new early highs. There is no wonder that after a record jump last week, overbought conditions did not lead to a technical correction. Since the beginning of the previous week, indexes have increased by more than 2%. To reach the early highs seen this summer, stock indexes need to add just 2%, and this scenario could be implemented until the end of the year. Investors are waiting for the recent FOMC meeting minutes and some macroeconomic reports from the United States. Corporate data will be issued by Nvidia, Agilent, Autodesk, Dell, Dollar Tree, and Zoom this week. Stay tuned! And the financial market is always rich in unexpected and interesting events. Watch the video to the end and share your opinion in the comments. Although the beginning of a new week was quite positive, traders seemed to feel uncertain. This could be partly explained by the holiday period. On Thursday, the US market will be closed because of the celebration of a Thanksgiving Day, whereas Friday is shortened. The macroeconomic calendar is not rich in events. That's why investors are likely to be positive in the next few days. Data on existing home sales and durable goods orders is of a high importance this week. Existing home sales have been falling since February 2022, but the pace has already slackened. What's more, mortgage rates in the United States dropped from the October peaks to 7.61%. This may lead to an improvement in the real estate market and thus boosting existing home sales more than anticipated. In October, core durable goods orders may inch up, but the news will hardly cause a negative reaction. In addition, the Federal Reserve will publish its recent meeting minutes, and the overall tone of the document is likely to be hawkish, as just several weeks ago the Fed showed decisiveness in combating inflation. However, positive inflation report may have affected the regulator's plans. That's why the expected minutes may have a zero effect on the market. Inflation and monetary policy are the main factors that will shape traders' sentiment this week, as it's not very eventful. Inflation figures caused discussions of a possible key rate cut by the Fed. The worsening of the labor market situation is also supporting the idea. A decline in employment and a rise in the number of unemployed claims also favor the key rate cut. Traders suppose that the key interest rate may drop by 1 percentage point by the end of the next year. The first cut may take place as early as May. Professor of finance at the Wharton School of the University of Pennsylvania, Jeremy Siegel, said that the central bank had almost finished its fight against inflation. That's why the first drop in the key rate may occur in March. In the present, markets have almost fully denied the idea of further monetary policy tightening. Such a backdrop may encourage traders, thus spurring a New Year rally. Considering each index separately, it's worth noting that last week the Dow Jones increased by 1.9%. Since late October, the index has added 8%, exceeding 35,000 points. Although the main indexes have been striving for the best monthly performance since June, not all traders are optimistic about the current state of affairs. Some famous investors, including Jim Rogers and David Einhorn, warned about a possible recession and its aftermath. On the daily chart, we saw an important sell signal, the so-called death cross. Such a formation is defined as a bearish signal which points to a change from a bullish market to a bearish one. The pattern was last seen in March 2020. After that, the Dow Jones slumped by 12% in the following 5 months. Meanwhile, experts at the Goldman Sachs foresee a rosy future for the US economy next year. Predicting a soft landing, they consider slower economic growth, lower inflation, and expectations of the key rate cut as factors that may lead to a decline in bond yields and boost stocks. As for the S&P 500, it advanced by 2.2%. Its next target is located at a peak of 4,600. Although the growth pace is slackening, the correction has not started yet. A drop from local highs was limited and short-lived despite the fact that the market is overheated. In the case of a correction, the support level will be located at 4,450 points. It's obvious that assets cannot rise constantly, and they need a technical pause to jump to early peaks with a new strength. The S&P 500 has every chance to reach an early high of 4,600 points to the end of the year. In the short term, investors may take a technical pause, thus lowering overbought conditions and creating an opportunity for the further rise. The current peak of the S&P 500 is located above 4,520 points, which corresponds to the level recorded on September 1. Demand may surge once the index touches the level of 4,450 points. There, traders may open additional buy orders, thus pushing the asset to fresh highs of the year. Last week, the Nasdaq added 2.4%. On a Monday, the index showed the best performance among the main indexes by increasing by 1.1%. Curiously, the S&P 500 was only slightly behind its counterpart and climbed by 0.7%. The Nasdaq reached the highest level since July, exceeding 16,000. The technology and communication services sector manifested the best results. The rally was headed by Microsoft. The company's stocks jumped by 2% to a record $377.22 after its management hired the former head of OpenAI, Sam Altman, to lead a new research group on artificial intelligence. Microsoft was on track to increase its market value by almost $30 billion at the current levels. That was close to the valuation OpenAI commanded in its last fundraise. Nvidia shares also hit a record level of $504.20 ahead of the publication of quarterly results. Boeing shares skyrocketed by 4.6% after Deutsche Bank and analysts upgraded them to buy from hold, and the hype about Microsoft attracted the attention of most traders. According to Bloomberg, hundreds of OpenAI employees have expressed a threat to resign as they intend to follow former CEO Sam Altman. Approximately 500 of about 770 employees of this company are demanding the resignation of the current board of directors of OpenAI. Against this backdrop, Microsoft shares are actively gaining in value. And we continue to monitor the stock market situation to keep you abreast of the latest events. Subscribe to our channel and leave your comments. We are working for you, making the most relevant video reviews every day and every week. That's all for now. See you later.